Should you be investing in EVs? That is a discussion that we're going to have today with Varun Gupta, CEO of Groww Mutual Fund. Groww is incidentally launching an ETF and an FOF which invests in EVs and new age auto. So we ask Varun what all of that is about and why you should invest and what the risk factors are. So Varun, to begin with, if you can tell us what is the case for investing in EV stocks or stocks of auto companies which have some relation with EVs?
First of all, thank you so much, Neil, for the invitation, and really love to be here and talking about not just the fund which we have launched, but also one of the big change which is potentially happening in the Indian automobile industry. I'll just talk about electric vehicles, in a nutshell. So, EV overall is a very fast, like if you look at it, it's a very fast adoption by customers over a period of last 4 years. As I was sharing with you, till 2021 to 2024, there has been a CAGR of 243% in the, electric two-wheelers which are being, created in India.
So 21 में कितने थे और अब कितने sales हैं?
So I think about 20,000 units were created in 21, and now FY24 there was about 1 million units which were created. Right.
Insane. And this is India only.
This is only India. And in all the other countries, we have seen the success already happening, right? The electric vehicle penetration, if you look at it in China, is 30% plus. In Scandinavian countries, is significantly higher, right? In US also, it's about 20% plus. And India is just at a very, very early stages.
What percentage is it?
So the current penetration is in two-wheeler is close to 5%. Mm-hmm. If you look across all the automobiles, which is two-wheelers, three-wheelers, passenger cars and buses, is close to 6.8%. But it's growing year on year. FY21 was close to 0.2% for all vehicles. Now it's close to 6.8%. So very, very fast growing trend.
Right.
In some, of course, depending on, because India is a very varied, geography. There are a lot of different states with very different habits. So different vehicles will pick up at different times. Like two-wheeler penetration is significantly faster than a four-wheeler penetration, and three-wheeler is significantly much more faster. Just for example, three-wheeler penetration is close to 50%.
Oh, really?
Yeah. In a year on year, the number of three-wheelers which are getting created, 50% is EV. So that will change. Like two-wheeler will be faster, three-wheeler will be faster. There will be different versions of three-wheeler which might come, like hybrid or PHEV, which we are talking about. But what we believe, or what is very evident, is that there is a strong customer demand. There is a strong tailwind to this, which is also coupled with a government desire to basically get this sector to a certain height. There are multiple reasons for it. We'll talk about it more. But we believe that this is going to be it's a sunrise sector, and that's why from a long-term perspective, if you have that kind of a risk appetite and you believe that if you have conviction on this kind of a sector, there is one sector or the kind of selection of stocks which you can basically think about investing in.
So Varun, historically the two main objections to EV have been as follows. एक तो महंगा है, way too expensive.
Yeah.
दूसरा, range नहीं होती. God knows I'll be in the middle of some trip and my car just stops.
Yeah.
How much has that changed over the years?
The first purchase price of EV is costlier than a ICE vehicle, right? Internal combustion engine vehicle. And the charging infrastructure is still developing. But the trends, like the tailwind, is very, very high. The two-wheeler penetration has increased because the technology is improving, right? So the range is improving. So there is a shift which is happening or basically advancement in the technology which is happening from lithium-ion battery to an ACC battery, right? Advanced chemistry cells battery. If that happens over a period of time, that itself can basically make the range of the vehicle much faster and make it much, much more efficient. The second is that the charging, there are a lot of companies which are working in the charging infrastructure sector. I was looking at it, there are about 20 to 30 startups in India which are basically thinking about creating different kind of charging infrastructure, starting from battery swapping to 20% battery charge, 30% battery charge at a very fast speed. So there is a charging infrastructure which is getting created, and also there is a lot of subsidies by the government still, right? So with the increase in cost, if you compare the total cost of ownership, which is one of the very primary, a key indicator which we should look at, which is like after you have purchased the vehicle over a period of next 3 to 4 years, the total cost of ownership, including the servicing cost, the petrol cost, fuel cost and everything. So EV is better than ICE over the next 3-4 years when we have done And the like-to-like comparison, like over a 2-wheeler and a 3-wheeler and a 4-wheeler, definitely they are, cheaper.
So interestingly, Varun, and in fact, I would like to tell our viewers, so we at Mint also did a comparison that if you buy an EV of the same make and the same manufacturer versus the petrol variant, how long does it take to break even? So our calculations suggest that if you drive more than 30 kilometers a day on average, then it takes about 3 years that you break even.
Okay.
Which is quite good. And incidentally, I've actually experienced some of the benefits. I mean, my mother owns an EV. We managed to go all the way to Lonavala without needing a charge. So some of that is also coming off in terms of...
And came back again?
No, we didn't. Wahan pe jaake we had to charge.
Okay. That's very interesting. Yeah. But for intercity, like if you have to commute, like office commute is a very, very big need in India, right?
Yeah.
And for that, EV solves it perfectly. So I agree that there are not a lot of charging stations right now, but you get charging stations in office and at home.
Yeah.
And this is only going to increase from here on, right? Because of the companies working, the infra is getting created. Government is basically subsidizing a lot of it.
Yeah.
And once that keeps getting created, it's basically an increasing trend. So it's not, I wouldn't say that it's right now there that it will start competing with ICE immediately. But the estimates are that government is basically trying to, from currently 5%, they want to take the penetration to 30% by 2030. And if that happens, then all the supporting infra around it will definitely get built up. It will not be that 30% will just reach by the push of it, right?
By the way, just one clarification is Pune to Lonavala, not Mumbai.
I don't know, it's closer or...
It's closer to Pune,
Okay.
Now, one other objection to investing in EVs as a theme is there are no pure play EV manufacturers in India. There is no Tesla equivalent. So essentially, when you buy these stocks, you are buying businesses which have actually very large conventional businesses. So is there a way to capture that pure EV play?
So you are absolutely right. As of now, in this, if you talk about this product specifically, this index specifically, out of the 33 companies, none of them are a pure play EV players. In fact, if you look at it from a percentage contribution to, in their business, how much comes from EV, there is a stock which is at 2% contribution, and then there is a stock which is at 88% contribution. So there are varied list of stocks.
Oh, 88 is really high.
Yeah, so there only one company. There is, I think, Electra is the one, but it's quite high, right? Now, the idea is right now, because EV is a growing sector, there are companies while there are some companies which will get listed, which are pure play EV, but currently there are a lot of incumbents who are basically playing in this category. The most important thing which I believe is that it's not just the automobile manufacturers which are in this product or in this scheme, in this index which we are on which we have launched a scheme. In the entire value chain of EV, you will get multiple players who are doing different things. So for example, there is an automobile manufacturer, right? Then there is a battery manufacturer. Then there is a battery component manufacturer. Then there are raw material suppliers, for example, the ones who are supplying the chemicals for this. Then there is ICT players like information communication technology at Tata Elxsi or LTTS, who are basically supplying the, creating the technology for EVs.
Right.
And then there are companies who are outside of this, in all these groups, but also receive PLI and incentives from the government. So it captures this product, this index is capturing this, the stocks across all of this. The way I see this playing out, as I was giving you the example, right? It's very much like how mobile phone has basically evolved in the world, right? There are different companies working on different technology, and one technology or one set of combination of technologies will be successful, and the companies who are able to adopt to it will continue to grow, and remaining will, over a period of time will figure out different product markets. Same is going to happen in this EV index as well.
Right.
There might be a shift which is happening from lithium ion to ACC batteries, right? And there are companies which are not ready to make that shift. And if that happens at a larger scale, then that companies who are not able to adopt might go out of favor. So this index will keep on rebalancing. One of the biggest advantage which you get with this index, it rebalances every 3 months. So if a new EV player is coming in the next rebalancing, that EV player will have a weightage in the index, right? And some companies might go out who are not fitting the criteria very well.
Varun, that is one thing that I wanted to understand a bit more.
Sure.
Because I get the conventional argument with passive versus active, that in passive, let's say the NIFTY, or the Sensex, they are market cap based, so they automatically capture whichever company is rising
Sure.
and clean out the companies that are declining.
Sure.
In this case, it's thematic.
Yeah.
So how does the index itself know that, look, this company is an EV company and it's rising, therefore it's going to be part or something else is going to be chucked out?
See, basically this is an index designed by NIFTY. The way it is done is that they have defined certain parameters and they will keep on monitoring in the company's annual reports and in their, the AGMs which they do, which is basically contributing to EV. There are certain set of guidelines. So if I have to explain this, there is a group A, which is all OEMs, basically the automobile manufacturers. But that is capped at 40%. Only 40% of the weightage of the index will basically go to them. Then there is Group B, which is basically the battery manufacturers. Then Group C has three categories, I think. One is the raw material suppliers, which is the chemical companies. Then we have the information technology companies, which is Tata Elxsi, LTTS, and a few of them. And then there are component manufacturers, right, which are battery component or auto component manufacturers. And then there is a Group D also, which is not coming in either of this because of the market cap, but has received PLI from the government for building the charging infra or something or the else, right? So they take all the companies from this, and there is a deep research which goes into identifying these companies, right? That is how this index keeps on looking at which are the companies, if there is new company which is entering. So this is the logic which has been created, that this is how we'll capture the entire value chain of the EV ecosystem in India. So that entire coverage basically gives you the entire exposure to all the EV stocks which are present in India. That is what we, and if so, for example, there is a company which has, let's say, for some reason it is participating in EV, but it is not getting covered in this index. As soon as its business will start rising because of quarterly and half-yearly AGMs, it will get included in the index. And so that is where it keeps on covering the entire EV ecosystem.
And what percentage of it is mid and small caps?
So currently, large cap is close to 37%. Small mid cap is close to 55%, and remaining is small cap.
And the concentration does that pose a challenge?
So here there is not significant contribution. I think the largest is Tata Motors, which has only about 8%. The largest stock is 8%. So there are about 33 stocks in this index, and I would say it's a very diversified theme, right? While see, it is not a sectoral sectoral index. Like it is not, let's say Nifty Auto is a very sectoral index. It is only betting on autos, right? So it's a very thematic kind of, it's capturing the entire value chain. So there are, I think, 5 sectors in this. There is auto and auto-ing, which is truly like about 70% of the overall index weightage, which is supposed to be so. But there is ICT also, there is oil and gas also, there is chemical also, there is capital goods also. So I believe it's a very diversified thematic, kind of concentrated, but yes, diversified. Again, I would like to put this caveat, because very important from an investor point of view. A lot of investors will be listening to it. I still believe that there is a risk in this portfolio, right? And for making any investment, we would suggest you to consult your financial advisor and read the scheme documents carefully.
Right.
And most importantly, this is not the core portfolio. So I wouldn't say core portfolio still has to be diversified, right? It's diversified investment where a fund manager is basically managing, because they are looking at the all risk reward. Here it might be volatile because this is a long-term theme. It might happen that some years it is not doing well, some years it is doing well. Only with very high conviction, and keep this is a strategic allocation. Like do a strategic allocation to this portfolio and observe it over a period of time, and then maybe think about what you want to do with this allotment. But this is not a part of your portfolio. And again, consult your financial advisor.
Of course.
Yeah.
Are you okay with the valuations? It's more expensive than the Nifty overall.
Yeah, you're right. See, basically, there are 2 parts to it. First part is that it's a growth kind of fund, right? So in a growth stocks, it's a forward-looking PE, right? Always Nifty, I think, is valued about 23, 20.
Correct.
Right.
Correct.
So in a growth stock where there is a potential for growth, the PE will always be higher. But also, very importantly, because it's largely auto and a related sector, we should look at this PE in those sectors. Like stocks also, for example, FMCG PE is always higher than Nifty PE.
True.
Right? IT PE is always, I think, a little lesser or comparable to Nifty PE. Right? I don't think we should compare it to Nifty. But having said that, I think these are growth sectors. So valuations, if you ask me, my personal, it's a premium right now, right? We all are aware.
Yeah. The whole market is
at a premium. So at this point of time, we believe that there are opportunities which exist in a theme or a particular sector in a particular thought process. So that is where we are coming up with this theme. It might only time will tell what happens to the premium and market, but this is a long-term tailwind, long-term growth which is happening in a particular sector, and we want to give opportunity to our investors to basically potentially get benefited from it.
If somebody wants to hedge it, they can always do an SIP in your...
Oh yeah. So there are two types of products which we have launched. One is ETF and one is FOF.
Right.
FOF on that ETF. So what we have realized is that, so this is our first ETF by the way. So we realized that, so we always listen to customers, right? This is our core philosophy of our group and of Groww Mutual Fund as well. Customers want to invest very differently. So ETF, customers want to hold the units in their demat account, want to trade it as a stock. And then there are segment of customers who want to do SIP, want to hold that as a long-term, for long-term and gradually build their portfolio in that scheme.
Correct.
So we have launched both schemes, both are live right now. There is ETF in which you can directly buy if you have a demat account with a broker. You can buy, or you can also consult a financial advisor. And FOF you can buy through any financial advisor. It's available publicly.
And you can do an SIP in the FOF.
You can do SIP in the FOF.
Abhi budget just ho chuka hai kuch din pehle.
Yeah.
How will this be taxed, both the ETF and the FOF?
So ETF will be taxed at equity rates. It's basically STCG is I think increased to 20% now. Yeah. So STCG is 20% for holdings less than 1 year.
Correct.
And LTCG is 12.5% for holdings less than higher than 1 year.
Correct.
ETF is taxed at equity. In FOF also, because it's pure equity, it's investing directly in the ETF and it's holding only equity, it will also be taxed at equity terms. So STCG again at 20% for less than 1 year holding. For more than 1 year holding, it will be taxed at 12.5%.
So Varun, finally, at MIT we have this philosophy that if a theme is emerging, if it's promising, then it is a diversified fund that should take allocation to it rather than a sectoral or thematic fund, because investors usually don't know when to get in and out. So why not play it through one of your diversified funds?
Yeah, also very interesting question. See, I always believe that in a thematic fund, timing is very, very important, right? Like when you should not enter when it has reached its pinnacle and the story has played out. And of course, it comes with its own volatility and with the investor, it becomes investor should be very, very cautious of it. Again, I will on the risk of repeating myself, I will say that this fund, very importantly, it's a thematic fund. It definitely carries more risk than a diversified fund. And this should not be a core portfolio. At best, you should look at a strategic allocation for this fund. Only if you understand EV, if you have a lot of conviction behind it, then you should think about it. Otherwise, you should continue with the core portfolio of schemes. But having said that, I believe this theme basically creates an opportunity, right, for you to participate actively in a sunrise sector, right? And in a diversified fund where you don't have control, right? Like the fund manager's conviction, how much they're convinced about the growth of EV in India. Now, what we are seeing is that in the last few years, the awareness of the investors have increased drastically. Like a lot of people are in the market, and retail investors are reading a lot more. There's a lot more education. And this is a product which is like, if you want to take a direct exposure instead of having a diversified fund where it is, then you can consult a financial advisor, do your own research, read the scheme documents, and then can think about having some strategic allocation. Again, not a core portfolio.
Brilliant.
Yeah.
Varun, thank you so much for joining us. It was lovely speaking to you.
Always a pleasure, Neil. Thank you so much. Thank you.